One of the biggest issues we've seen with some of our clients is actually in the realm of excess insurance. And excess insurance or excess policies oftentimes get short shrift. They're not thought about very seriously because other than maybe their cost and the limits of liability that come along with them, they're not given serious consideration because they generally follow form to their underlying insurance. So their terms and conditions aren't focused on until really it's too late. But really, the terms and conditions of an excess policy, particularly their exhaustion language, can have a huge significant role when it comes time to settle a significant claim that implicates multiple layers of insurance. And what I mean by that is, let's say you have a large claim that implicates 3 levels of insurance: primary, first excess, and second excess. Well, oftentimes when you go to the settlement table, you're only going to the table with the primary insurer first, and the first and the second excess kind of sit on the sidelines and watch. And so then the question arises, well, what happens if the primary insurer doesn't want to settle for full policy limits, which is very common. The primary insurer has thrown out however many coverage defenses they've thrown out, and no matter what arguments you have and what stage of any dispute resolution process you're in, they want some credit for however small for those coverage defenses. When you're at the settlement table with your primary insurer, can you settle for less than policy limits but still access your upper level excess insurance? An excess insurer typically takes a position that they have no responsibility for a claim until their policy is triggered, and their policy is not triggered until all of the underlying limits are exhausted. And depending on the policy language in the excess insurance policies, they may argue that the underlying limits are only exhausted if the underlying insurer pays their full limits, that those limits cannot be paid by anyone else. So that's where you run into the issue of whether or not you can settle with your insurer for less than policy limits, then what's referred to as fill the gap. You as the policyholder, you fill the gap and make up the difference between what you settle with what the primary insurer pays and its policy limits, and then access your excess insurance. So the answer as to whether or not you can do that, maybe not surprisingly, comes in the excess policy itself, what's referred to as the exhaustion language in the excess insurance policies. And that exhaustion language generally falls into one of 3 categories: the good, the decent, and the ugly. Kind of similar to the Clint Eastwood movie. So with the good language, it's a home run. It unambiguously states that underlying limits can be exhausted through payments by the insurer, through the insured, or someone else on behalf of the insured. We've never seen an example of an excess insurer challenging the validity of that language, the ability of a policyholder to settle for less than policy limits and fill the gap to access its excess insurance. Now, with respect to the good language, we've seen examples of that in standard form excess policies, but many standard form excess policies don't have that language. And that's where it's very helpful to engage coverage counsel to negotiate that language. Not all brokers are in tune with this issue. They're not familiar with the breadth of case law on this issue, interpreting policy language, and they're just not always aggressive in negotiating that language into the excess policies. It's something that we've had success negotiating into excess policies by way of endorsement on behalf of a number of clients. That's real value that Miller Friel can add in the negotiating process when you're placing or renewing your insurance policies.